Hey everybody, my name is Brandon from StockSnews.com, and today I want to talk about Alibaba Stock, ticker symbol BABA, and how it is down over 8% in about 2 weeks. So now let's get started. So here we are in Google, and here's a 1 month view of Alibaba stock charts here, and we can see in about 2 weeks we have lost about 8% of our value here. So of course it is likely that we have dropped due to the regulatory actions that China's government has been taking against large tech companies like DiDi. We can see here, if we scroll down here at the news and this Bloomberg opinion article, there are a lot of opinions on the matter of government intervention, and a lot of them are, of course, negative. The author of this article seems to think that China is sort of shooting themselves in the foot here by cracking down on their own technology sector, by conducting regulatory action on large tech companies like Alibaba, like Tencent, like DiDi. Some people are believing that these actions will stifle innovation in China and hinder progress. In addition to China's crackdown, there is no doubt geopolitically rising tensions with the ongoing rhetoric here from President Xi. Again, you have to make your own mind about the politics here. This is not a political show, so I'm not going to go into the politics. But to me, I want to frame this discussion as an increasing risk to an Alibaba investment, because at the end of the day, this is an increasing risk to an Alibaba investment. Not knowing if Alibaba will be fine again, or if its apps and websites will be taken down like DiDi has, is a risk that investors need to consider. For me, right now, my opinion is that regulatory risks will always be a threat to any company that gets quote-unquote too big. Take, for example, Amazon. Here in the United States, President Biden just signed executive orders to curb big tech companies like Microsoft, Amazon, and others. Another opinion here from me is that even though I do think there are short-term regulatory risks that China is putting on its own companies, I still think that long-term, large companies like Alibaba and Tencent will still reign supreme. Alibaba just announced global 72-hour deliveries. Just think about that for a second. Think about the size of your business, the depth of your business, and the efficiency of the business that you need to promise that. When I see this headline, I do not see a company that is being severely hindered or its innovation being cut down. As I've mentioned in my previous Alibaba videos, where I've talked about the anti-monopoly fine, I've talked about the actual facts of what Alibaba did, which was the Arshuan e-policy, and how that was factually anti-competitive. Alibaba, in my opinion, should have been penalized for implementing that kind of policy. For me, sitting back and trying to digest what is going on through the Chinese regulators' minds when they're making these decisions, I find it hard to believe that they are purposely trying to undermine China's technological advancements. We also see here that China's regulators actually approved a Tencent deal just today. So because of this, the idea that China's regulators are trying to stifle innovation is really ludicrous. I think that this is mostly just a show of power, a flexing of the political muscle. It is because of this transient flexing of political power to make a point before returning back to pushing the state-chosen heroic companies. That is why I'm not too concerned with Alibaba. I believe that this phenomenon will be transient. It just does not make any sense to me why the government would choose to end Alibaba's growth potential. Alibaba's influence is by association the Chinese government's influence on the world. To me, I do not think that China is thinking one move ahead on the global game of political chess. I think they're thinking 5 moves ahead. I think that they are trying to make the decisions that are not home runs right now. I think they're trying to make decisions that will set themselves up for success years from now. And I think that Alibaba is a company that could still play a role in that type of future. So with all that said, now let's take a look at Alibaba's earnings report to see how Alibaba is doing as a business. So here we are in Alibaba's most recent earnings report, and we can see here that year over year, revenues here are growing fantastically year over year, which is more than a 64% increase year over year. Now, normally, these types of numbers are only what we see in much smaller companies, when the companies only had a small amount of revenues last year, so it was much easier to have this amazing growth rate. But no, Alibaba is currently at around $28,000 million, which is $28 billion. So in 3 months or 1 quarter, Alibaba was able to sell around 28 billion United States dollars. That means in a year, they were able to increase the quarterly revenues by about 15 billion United States dollars. And that to me is amazing. Now, if we look at the adjusted EBITDA margins here, we can see that year over year, we are lacking a little bit. A couple of things could be going on to explain the seemingly burst of inefficiency that has been going on year over year. I think that the most likely case for the lower margins is because of supply chain troubles. Of course, we hear it in the news all the time now. Supply chains are seeing heavy volumes and are being overburdened. I think that Alibaba could be seeing some of the effects going on here, as well as possible restructuring of the business to comply with some of the anti-monopoly complaints from the regulators here. So speaking of anti-monopoly regulations, we can see here in the net income / loss, we can actually see that we reported a loss for the quarter compared to a profit last year. And if you look at the footnote over here, that was because of the payment of the anti-monopoly fine. Again, regulation should always be in the mind of shareholders and potential investors because it does have a meaningful impact on the bottom line of companies here. Even though I think we still have to pay regulators a little bit more to fully cover the bill, investors are hoping that Alibaba gets back on track to seeing a net income again after another quarter or two. Again, if I was a long-term investor, I would not really be too concerned about this fine. If anything, I would actually be more concerned about the decreasing profit margins here. Because again, that is showing a little bit of an inefficiency year over year. So I would be paying the most attention to that over the next few quarters to make sure that Alibaba is able to increase efficiency once again and to make sure that this inefficiency does not become a trend. So with all that said, now let's head on over to Alibaba stock charts here to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So here we are in Alibaba stock charts and we can see what a downtrend we have been in since November of last year. We can see that we've been making lower highs and lower lows. It's anybody's guess what will happen and when the downtrend will stop. But I do think that around the $200 level is a support level for the stock. For one, it is a nice round number that people like to put orders at. I've talked about this before in previous videos, which talks about the micropsychology of that. We are coming up against another support level, or if I zoom in here, around the $205 and $210 level. We can see that we actually broke this $205 resistance level made from the bottoms of these candles over here with momentum upwards. So because of that, now we're at the 210 support level. If we look at the ranges here, I see another resistance level around this 220 mark. So right now, I think you have about $10 to the upside, but also $10 back down to this $200 support level here. So right now you're in the middle of a range, and I don't like to be in the middle of a range when I'm putting my money in for either long-term position or for a short-term trade. I always like to put my money in the bottom of a range, which would be around this $200 level. So because of that, that would be the first place where I would be looking to pick up shares. Now the next question should be, will this $200 level ever break? And the answer to that is that nobody knows. If there are more regulatory news coming out of China, or if there's more news about the health crisis that is still ongoing right now, we could definitely break this $200 level and continue our downtrend lower. As always, because I do have conviction around the Alibaba stock long term, I'm thinking years into the future. And I think that this opportunity is a buying opportunity. But again, the reason why I think that is because I'm aware and willing to take on the regulatory and international risks here. If we zoom back out here from Alibaba, we can see that our next support levels below the $200 level would be this one around here, made from the bottoms of these candles around the 195 level, and also this one down here around the 190 level. If there are a ton of regulatory news, then yeah, maybe we could hit the 185 or even 170 here. But I believe that the probability of that happening is low. Around the $170 level, there I will be backing up the truck and loading up with Alibaba with both hands. As always, oftentimes the moments where investors make the most money in the stock is when investors buy a stock that nobody else wants. It's always up to you if you think a risk is worth taking, and there are definite risks here with Alibaba. As always, I encourage investors to consider the risks carefully before investing. So that was my review on Alibaba stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.